Profit and loss statements, balance sheets, cash flow and budgeting tools. These important documents can often be difficult to understand for new business owners. In this video, we're going to look at each one in turn and decode them for you. If you've been an employee, you normally get paid each week, fortnight or month. The money you receive is all yours, since your employer has arranged for the appropriate income tax and superannuation to be paid. It is very different in business. Business owners need to be mindful of many things when they receive payment from a customer, including goods and services tax, GST, expenses they need to pay, for example, rent, insurance, internet access, wages and superannuation. If you run a business, we suggest as a first step that you separate your personal and business accounts. Then within your business, you may find it useful to have a few different accounts where you can separate your operational expenses, the money you may need to set aside for taxes, and your reserves, rainy day account. How many accounts you have will be up to you and your accountant, and what makes it easier for you to track and manage your money. Even successful businesses can come unstuck if money is not available when it is needed. Many a business owner has had a sleepless night hoping a client would pay an invoice to enable staff and their own wages to be paid. There are ways you can influence the way money flows into your business. Marketing yourself well, selling to profitable customers, understanding what products and services have a higher profit margin and delivering more of those, invoicing in a timely fashion, and only dealing with clients who pay on time. You can also make it easier for customers to pay you by taking credit cards or incentivizing them with early payment discounts. Similarly, you have some control over the money going out of your business. You may be able to buy supplies when prices are low, and you can monitor your expenses to keep them in line with current business performance. Ultimately, you are accountable for managing the money in your business. The good news is there are many tools that can help business owners better manage their money. Let's review some of these tools now. Cash flow is often a key challenge experienced by business owners. But what is cash flow? Think of cash flow like a river. Money represents the water flowing in the river, while the river itself symbolises your business. When there has been rain, when you've had lots of customers, the river runs high and fast. If there is a drought, your business is in a quiet period. There might only be a trickle of water. Ultimately, every business owner is responsible for the solvency of their business. Solvency is another word for having enough money to meet your financial obligations. And having this money at the right time is cash flow. A cash flow and budgeting tool is a way of predicting when money flows into the business, based on payment terms of your customers, and when it flows out, based on what you owe and when. It can help identify there might be a shortfall, an occasion when you don't have as much money as you require. Shortfalls, if known, can be planned for. For example, you could take out a short-term loan, request progress or prepayment from other customers, or keep a reserve of cash to cover such occasions. In its simplest form, a profit and loss statement, or a P&L for short, shows how much cash comes into the business, revenue, how much has gone out, expenses. The total at the bottom of the P&L will either be positive, a profit, or negative, a loss. This bottom total is also referred to by the acronym EBITDA, which stands for Earnings Before Interest, Tax, Depreciation, and Amortization. These are all items that can be added or subtracted from your profit figure to change your final tax or profit position for that year. P&Ls are traditionally used to report business activities to the tax office at the end of the quarter or year, but they are much more than that. A good business owner can use their budget to estimate profit or loss and then make adjustments as necessary. For example, they could raise their prices to increase revenue or find ways to cut expenses. More than numbers on a page, a P&L should be viewed as a tool that can help your business be more successful. In contrast to a P&L, where each year is treated separately for tax purposes, a balance sheet shows the financial position of a business at a particular point in time. It also shows a cumulative figure of how well the business has performed over time. A balance sheet shows assets, things that you own that have value, liabilities, things you owe to others, the owner's equity, the amount of money contributed by owners or shareholders of the business, plus any retained earnings, profit or loss. The balance sheet total should ideally be a positive number that increases over time. Since a balance sheet will show things that you own, for example, cars, equipment, cash, and the things you owe, for example, a bank loan, it is a great way to assess the value of the business you have created and can be regarded as an indicator of your success as a business owner. A cash flow statement is a tool that shows how well you can cover expenses like bills and employee wages. It will show you where the money is coming from and where it is going. It will help to find out if you are going to have any trouble meeting your expenses, now or in the future. If cash is going out faster than it is coming in, you may have a problem meeting your expenses. For most businesses, there are 3 main parts to a cash flow statement. However, your business may or may not use all of them. The first is the money you are getting and using in your day-to-day operations, your sales and expenses. The second is related to investments, such as buying and selling large items like property or machinery. The third is money you've borrowed or paid back to a bank or investor, and also money put in or taken out by you as an owner. As a business owner, you can use cash flow statements to show the flow of cash into and out of your business. It helps to set budgets and troubleshoot cash flow problems. It can also help you show the health of your business to investors. Finally, it will help you understand if you are profitable from the sales of goods and services, or if you're relying on loans or selling assets to survive. You will be more in control of your business if you use a cash flow statement as part of your regular reports. As a business owner, you have to report your performance on a regular basis and pay your obligations on time, such as superannuation and tax. In contrast to employees, you'll often impact a lot more people in the community. Your suppliers, staff, and customers are examples of some of the groups of people who will rely on you. It is important to fulfill all your business obligations and understand that these may vary from time to time due to factors such as business location or business size. There are a number of different business structures you can choose from when starting a business. You could be a sole trader, a partnership, a limited company, or perhaps even a trust. Each of the different structures may impact how you operate as a business and can impact key areas such as tax, assets, and setup costs. It is therefore important to seek expert help when establishing your business to make sure it is set up correctly. We hope that you now have a broader understanding of some of the financial statements relevant to businesses and appreciate that they can be useful tools to help better manage the money in your business. To learn more or to access tailored advice and free events to support your business, visit service.nsw.gov.au and search Business Connect or call 13 77 88.